Ronnie, I'm looking so much forward to talking to you, especially with what's going on in the markets. I'm going to unmute you, and you'll probably have to hover your mouse. I hope you have a mic. And I'm not sure if you're
Yeah,
playing.
can you hear me?
I can hear you, Ronnie. How are you?
Very good, very good. Can you see me as well?
No, but if you want, you can both enable your webcam. You can also share your screen if you mouse over this little panel that expands for Zoom. As you see, there are buttons. One of them says Start Video. So if you want to show your webcam, you can press that button and you can start, your webcam. And if you click on the button,
Ronnie may not have anything to show. Are you going to show it? Do you have a screen to show, Ronnie?
Yeah.
Oh, okay. Because I have your website up. So
yeah, there is a green button that says share. If you click on that, it's going to ask you if you want to take the screen from me. You say yes, and then you select the screen you want to show.
Yeah.
Okay, perfect. It's coming up.
What do you see now?
Okay, we see
trust in many areas of life and society is crumbling.
Yes, I just have
in
to
gold
start.
We trust. Goldfinger.
I didn't know that Johnny Cash is still alive. Actually, I heard you singing before.
Oh, John. Oh, yeah, he is. In fact, I do his new song "Hurt," which is really a downer. But anyway, Ronnie, it's great to have you with us today on F.A.C.E. I want to thank you for taking time out of the day.
Thank you very much.
To be with us. Have we done this before, Ronnie?
Never, actually. You've had one with my colleague Demelza Hayes, I think.
Oh, you're with Demelza. Okay.
Yes.
All right. Great. So I knew Incrementum looked familiar to me. So she was great. And yeah, really nice to have probably how many people hold doctorates or working on doctorates in blockchain?
Yeah, that's true.
Is that kind of unusual?
It's actually pretty scary how smart she is.
Okay.
Given the fact that she's so young.
Oh, okay.
Can you see my full screen now?
Yes, got it.
Yes. Excellent.
A new gold bull market ahead. So, Ronnie, since we haven't talked before, it's always interesting to me. It's always interesting to me and our audience how you got into the financial market field.
Yeah, of course. Well, I started buying stocks when I was 13. Made lots of money through the dot-com boom, lost even more money during the dot-com bust. Okay. Went to university, tried to learn something about markets. It was a complete waste of time, but I worked in credit derivatives trading and afterwards started as an analyst at a bank. And in 2007, I started writing my In Gold We Trust reports. Okay. Because I owned a gold mining stock that did pretty well. And I didn't have any clue about gold, about the monetary history, about how the whole system works, how money is created, because of course they don't teach you that
but isn't that a tradition in your part of the world that, when you're 1 year old, your father will give you St. Gaudens, so you know about gold and the fact and that it's real. If you drop it on your toe, you feel it instead of fiat. Huh?
There is I would say in our monetary DNA. Yeah. There's gold. Gold is definitely important for us due to the hyperinflation that our grandparents lived through, and all the currency reforms, including the euro, of course. Right. So gold is physical gold is definitely important over here in Europe. When I just returned from Greece, actually, I had a fabulous vacation on a Greek island called Kefalonia. And it was interesting.
Steve's going to have a comment on this. Are you there, Steve? Maybe he walked away. Okay. So you were taking a vacation, recharging your battery. Go ahead.
Yeah, and it was interesting to talk to Greek people about gold and their affinity for gold and what it means for them, especially during the crisis that they had a couple of years ago. And then also, of course, I'm always talking macro, and most people just don't see that the euro is way too hard for most southern countries like Greece, for Italy, and so on. So for the Greek people, but also for people over here in Austria and Liechtenstein, gold is just a monetary insurance policy, I would say.
Okay, so the old expression is don't wait to buy gold and wait. But are you price sensitive to levels as to, I know about holding a physical, but do you ever say it's right to sell gold?
Well, I mean, in 2011, I would say when all the big Wall Street banks were extremely bullish already. Don't forget that Goldman, J.P. Morgan, Citi, they had price targets between 2,500 and 3,000 US dollars. So everybody was screamingly bullish back in the days. That should have been a good warning signal, of course. Yeah. But at the moment, it's completely the opposite. Basically, everybody is expecting gold to go sideways or lower the next couple of years. And from my point of view, we are in a new bull market.
Okay. So the new bull market really probably started after the correction from 1900 at 1050. And recently, we've broken out of a 3-year consolidation pattern. Say, call it ballpark 1365, 1375. What kind of targets are you looking for in this new bull market, and what kind of legs does it have as far as time? Mm-hmm. And as a main thesis that central planners are going to keep rates low and push more bonds and instruments into negative yield territory, and that's one of the major catalysts for this new bull market.
Well, first of all, I think the whole breakout above this massive resistance zone at 1360, 1380, yeah, it clearly showed that there's a macro regime shift happening. We're seeing increasingly dovish comments by central banks. Recession risks are strengthening. That's absolutely clear. It's not only the yield curve, but also Federal Reserve New York showing now really, really high recession risks. And actually, recession is not something to be scared of. It's something normal within a business cycle. But we all know what's going to happen in a recession. We will see lower rates. We will see fiscal stimulus. We will see further rounds of QE, perhaps MMT, helicopter money, you name it. So that should provide a positive environment for gold. Then I think it's important to say that gold as a zero interest yielding asset is clearly a long duration asset. So as the market moves to the view of lower interest rates, gold should not only begin to outperform shorter duration asset classes, it should basically exhibit a very high inverse correlation to bond yields. And from my point of view, what we've seen recently, this high correlation between gold and negative yielding bonds, that's gonna continue. I think
let me ask you this.
Yeah.
Along with your view on gold, does this also make you a long-term dollar bear?
Well, that's a tough one. I've got many friends being structurally extremely dollar bullish,
right?
And I see their points, yeah. But so far, at the moment, right from a technical point of view, I think the dollar is like a stock that doesn't rally on good news anymore. So, from my point of view, I'm not a structural, let's say, Euro bull, but I think everybody is super bearish the euro. Everybody knows that Germany is on the verge of recession, that the problems in the southern countries aren't solved, that we haven't seen the Brexit yet. The market has already discounted that. But if there should be a US recession, if the S&P should move into bear market territory, I think that's going to be something that the market has not discounted already, and that's going to push the dollar lower. From a longer term point of view, I just like gold as a currency versus the euro, versus the dollar, versus the Canadian dollar, Aussie dollar, whatever.
Against
I think it's
everything.
the strongest currency. Yeah, exactly.
And isn't that really the force behind any new bull market, that gold is appreciating across all currencies and not
Yeah.
a few isolated ones?
That's something that I want to show you. Can you see my slides?
Yeah, I go back to the one where the world is crumbling. I
Was-
think it was one of your first ones, but there's Mario and there's Jay, Truss and Central. There, Truss and Mario.
That's just, it's a bit of a philosophical start, I would say, because the topic of trust and the erosion of trust was the leitmotif of this year's In Gold We Trust report. So
Okay.
we said that trust not only in politics is crumbling. It is no coincidence that populists on the very right and on the very left side of the spectrum are winning most elections nowadays. It is a sign of this growing inequality that is also caused by our monetary system, of course.
Does this remind you of the 30s at all, this political movement?
Unfortunately, yes. Unfortunately, yes.
Okay.
And I think that you know, when you're studying gold, you also, of course, study history and monetary history, and I think there are many parallels, unfortunately. And I think that
you want to move to the next slide.
Yeah, I mean, we've seen this loss of trust a couple of years ago, and we shouldn't forget that trust is something very asymmetrical. So it takes ages to build up trust, to foster trust, and then, you know, within seconds or just a few moments, it can be wiped out. Let's not forget Lehman Brothers was founded in 1850, and in 158 years of existence, they haven't had any quarter with losses. And then just 1 week and the market lost trust in Lehman's liquidity and it was over. So trust is something really important. And from my point of view, trust in central bankers is waning because we have seen this massive U-turn after 10 years of a liquidity party where central bankers created 18 trillion US dollars out of thin air. Last year in fall, they tried to get out of this liquidity party. They wanted to take the safety net out. And we have seen what's happened in equity markets. So we've clearly seen how addicted the market is to liquidity, to further QE and so on. So from my point of view, the market at some point has completely lost trust in Jay Powell, in the Federal Reserve, in central banking itself. We shouldn't forget that like 1 year ago, the market was seeing 3 to 4 rate hikes in the US, and now we're discounting rate cuts and the end of quantitative tightening. Over here in Europe, Madame Lagarde, she's a lawyer, and actually, you know, what do you do at the IMF? You basically restructure countries. So from my point of view, it is pretty obvious that the ECB is in the zero interest rate trap. They cannot get out. They already signaled that there will be further quantitative easing. From my point of view, Lagarde at some point will introduce Eurobonds. So I would say if a recession hits, then on a relative basis, of course, the US is in a better position because they've got more leeway and wiggle room to lower rates, while in the Eurozone we are still still have Mario Draghi will end his career as a central banker without just one rate hike. And that clearly shows you that we will see much more aggressive measures going forward, and that should be a pretty good environment for gold. And as you can see here, I think, you know, the skeptics, those are financial market participants that were waiting on the sidelines. They will be entering this trade again. As soon as gold price rises, we'll see ETFs pushing into the market. We are seeing that there is further moves in the or volume kicking into the mining space and so on. And we have seen the last couple of weeks that there is some sort of buy the dip mentality starting now in the gold space. And
you have a comment on how on the gold silver ratio, which we talked about in the 90s, seems to be changing. And do you buy the maxim that all true bull markets, or at least the speculative side of a market run, is led by silver? And do you think this mean reversion in the gold silver ratio could continue?
Well, I would say that silver is some sort of a sentiment indicator on gold. And the fact, normally in the very, very early stages of a gold bull market, silver Exactly. So I think at the moment there's many people considering going into the gold, into gold mining stocks and so on. And actually, the last couple of days we've seen a massive reversal. We've seen massive volume in the silver miners. We have seen the gold silver ratio dropping. So
that's what I'm saying. So
exactly. So
that's a report. What a reporter would say. So a guy like you, do you think, I remember being around when the gold silver ratio traded a lot in the 40 range. Do you think that we're going to have a mean reversion? Do you have any feeling as to where this ratio could come into?
Yeah, I mean, on average, the ratio, I think since 1900 was trading around 40 or 42.
Okay. Mm-hmm.
And it is a mean reversion trade. And actually, just the last couple of days, we have attracted the strongest monthly investor inflows in ETFs and based on a COT. So there is something happening. Yeah. But still, the pure price picture doesn't convince me yet. But we should not forget silver is a tiny market. So if there's really investor demand kicking in, then we can go to 2025 pretty quickly.
They say, Ronnie, that the gold share, all the mining companies, the capitalization of all of them put together is so small. It's when money comes in, it has to go through like a garden hose. And then if it was silver, it would have to go through something with even a smaller circle. So it doesn't take a lot of money because the capitalization, especially as decimated as mining shares have gotten over the last few years, it doesn't take a lot of money to move them. Is that correct?
Yeah, absolutely correct. But what I would like to add is that silver is more of the inflation metal, while gold usually performs pretty well in deflationary environments as well.
Right.
So,
okay.
So I think, of course, inflation, nobody's talking about inflation at the moment. And, those, I don't know what the number now is, 17 trillion with negative yielding bonds. What is the biggest pain trade for them? It is rising inflation.
How about, okay, well, you sound pretty sanguine about rates, that the central banks are control it. I'm of the view that we either have, or there's one more decline in yields, but that yields are going to be yields going up is going to be the biggest surprise to the market, because most participants are going to say, how can 10 and 30-year yields rise when the Fed is easing?
Yeah. I mean,
Do you think yields could go up?
Of course they could go up, yeah. But still, I think we don't see for the on a relative basis, yeah. I mean, the 10 years don't look so bad, and we still don't see, despite the fact that we've seen such a big move, we don't see any big optimism in the US bond market. I think over here in Europe, valuations are just nuts, and if you see, Greek debt trading lower than or yields being lower than for the US 10 years, that tells you quite a lot. But
yeah, that's interesting. So I mean, they would be the short.
Yeah. I agree that there's an illusion of control of central bankers. And I think if this illusion starts to crumble and the trust starts to crumble, and we shouldn't forget, Equity markets are basically at their all-time highs. Real estate markets all over the globe are doing well. Bond markets are basically at their all-time highs. We're seeing kind of a Goldilocks scenario still in the economy. So nothing happened yet. But if there is this shift happening, and from my point of view, gold is kind of indicating this macro regime shift, then I think we'll really see the big moves. But we haven't seen anything yet.
You know, Larry Williams used to say, when the market goes up and gold going up at the same time, it's not a good sign, because gold going up is like saying the economy has a fever.
Yeah, I agree.
You like that?
Yeah.
So, so the temperature's rising. It was, 100, and now we're like at 101.8 on the thermometer. So, why don't you just continue? What a great PowerPoint and interesting interview, Ronnie. I know that you guys, you're with Demelza. You also believe in crypto, correct?
Yeah. I mean,
what do you like more, gold or crypto?
I personally like gold more.
Okay.
I think that, we are now launching a fund with 75% physical gold and 25% Bitcoin, and because most people cannot stand the volatility of Bitcoin. I'm very, very critical when it comes to all those altcoins, but I think Bitcoin is some sort of digital money. It is an basically anti-government money, anti-fiat money, and I think there are many similarities actually between Bitcoin and gold, like the high stock to flow ratio and so on.
I see zero. Please convince me against that. Let's begin by the very, very basic. Gold has intrinsic value.
No.
Gold doesn't have intrinsic value.
No. What should the intrinsic value of gold be?
So wait a second. If tomorrow, for some reason, gold is not accepted as money, for some reason, it has been for 5,000 years, but let's assume that tomorrow everybody on the globe decides, okay, we're not going to accept it as money anymore. Won't it have value? Isn't it going to be used in jewelry? Isn't it going to be used for transistors? Isn't it going to be used for so many applications? That is its intrinsic value. Intrinsic value, in essence, is if you cannot sell it anymore to somebody else or exchange it, what do you do with it? I can tell you what you're going to do with Bitcoin, if that's the case, if there is no faith in for somebody to get it off your hands because they know that somebody else is going to accept it. But for gold, sure, I know it's not going to go to waste. So are we really going to debate if gold has intrinsic value?
Well, I think I've got a different definition of intrinsic value, but that's, I'm very much influenced by the Austrian school of economics that says there's value is always very subjective. So let's say, the value of a Picasso painting. Yeah, what is it? Is the intrinsic value actually what he paid for all the colors and stuff, or is it what the market wants to pay for this Picasso painting? From my point of view, when the shit hits the fan, then you talk about this, let's say, stress, liquidity, and stress prices of assets. And then you're gonna see if the Picasso painting sells for $100, like $100 million, like in the bull market, or for I don't know, $5 million.
I'm in total agreement with you.
And when it comes to gold, I think it just has a 5,000 years track record compared to Bitcoin. That's a huge advantage, of course. But what is really, really, from my point of view, really puts the monetary value on gold is the high stock to flow ratio. So at the moment, there's 190,000 tons of gold, and every year there's 3,000 tons mined. So the stock to flow ratio is extremely high. So your natural inflation of the physical gold that you're holding on average is 1.6%.
Yeah, but you're ignoring something very basic here. gold is only one, and its physical properties is what makes it stand out from the vast majority of the metals. It can trust, for example, etc., etc. So there are many, many applications that can only be done with gold or with similar, very expensive metals. The difference being that Bitcoin, yes, does it have a limited supply? It does, but who limits the ability to create infinite number of cryptocurrencies with the same or even better properties than Bitcoin has? Nobody. While gold, it's a specific mineral, it's a specific metal in the planet. We cannot decide that we want it to multiply 50 times and, we snap our fingers and we make it happen. So that's a huge difference, which makes this comparison, in my opinion, unfair. Plus, you talked about inflation in essence. And let me ask you something. My son has lately, he's 3 years old, and he has lately started painting. You can understand what a 3-year-old is painting. So let's assume that he stops after having painted 100 pieces of paper. So, that's something that is going to have a very low inflation. Will that assign it a very high value just because there won't be any more paintings of my son out there?
No, of course not.
Because for something to gain value, also based on the fact that there is no high inflation, which erodes value, and we 100% agree on that, it has to initially have value. Because I can tell you many things that have no inflation but remain worthless because they always were. So for me to be convinced that Bitcoin is going to survive, and let me be very clear, I'm not doubting that the world is going digital. I'm not doubting it at all. What I'm completely uncertain about is, why would Bitcoin survive and not something else? Why wouldn't it be replaced by something that will also be a medium of exchange? Because Bitcoin cannot make many transactions per hour, so it can never be a medium of exchange. So
No. No, I think that, am I sure that gold will have probably a higher purchasing power in 5, in 10, and in 50 years? Absolutely, yes. Am I sure that this is going to be the same for Bitcoin? Not so sure. Definitely. And from my point of view, the important thing is that people are discussing money again. And they're discussing, is gold money, is Bitcoin money, what is better money, what is the advantages of Bitcoin versus gold, what are the disadvantages? And I think this is a crucial discussion, because people nowadays, they talk about all the shit on Instagram and Facebook, but nobody wants to talk about really important things that affect us all. And one of the most important things that affects us all and is the root cause for many problems is money. So therefore, I really appreciate the discussion that is going on. And I appreciate the fact that there's many, many young people all over the globe trying to find good solution nowadays. Lots of the stuff that was published and sold was wiped out already, are scams and whatever. But I think that digital assets will be here to stay. From my point of view, Bitcoin will have the big test. If we see a recession, if we see markets crumbling, then we are really gonna see the advantages or the disadvantages of Bitcoin. Because let's face it, we haven't had one big cycle, one big business cycle in Bitcoin yet, and I'm not sure how Bitcoin is gonna perform when the S&P crashes.
I agree 100% with you. It might work as a hedge, but it might do the exact opposite. I mean, people might,
I mean, there are times like if rates go up in a crisis, people, and cash is king, people will sell everything to raise cash in a liquidity crisis. I think that's a possible scenario. Why can't everything go down? Everything's gone up together. Why can't everything go down together?
Yeah.
Do you think that's a possibility, Ronnie?
Of course. And I think, coming back to gold, we have seen in 2008, actually, here it is. 2008, gold was up 5.6%, but during those weeks when Lehman went down, when we had all the mess with AIG and so on, gold was down, and many people say it was manipulated. Yeah, perhaps, I'm not so sure about it, but gold is extremely liquid. And within those stress situations, you want to sell liquid assets. And the thing
you can't
about
sell a house at the market.
Exactly. And the thing that I want to show in this slide is it is important to see that gold is now rising in every currency. In euro terms, it is up 13% year to date. In dollar terms, gold is up 10%. Gold is up, in Australian dollar terms, in Canadian dollar terms, we're close to new all-time highs. So gold now really is in a new bull market, and a bull market that most people don't really appreciate yet.
Ronnie,
they will get to appreciate it though.
And that's actually a pretty interesting chart, because we were talking about the gold-silver ratio before. That's some sort of correlation between the S&P and the gold-silver ratio. Here it is inverted, the gold-silver ratio. And it shows that there was a pretty high positive correlation back in the days between the S&P and the gold-silver ratio. But this kind of snapped in 2014, 2015. So from my point of view, this is a sign that the monetary inflation that we have seen mostly spilled into financial assets and not really into into real assets.
Financial engineering.
Yes. Yeah.
Okay, so let me ask you this on financial engineering. I've thought about this. So a lot of people are very worried about, last time it was housing. This time it's the corporate debt market, because rates are so low and it's huge. And they use those proceeds not for new plants and equipment, or maybe even mergers, but for paying out dividends and buying back stock. So is every multinational corporation leveraged to the hilt through financial engineering by buying back their own stock with cheap money? And what happens if the cost of money goes up and the market declines? Will that exacerbate the situation?
Yeah, of course. I mean, I think the biggest bubble nowadays is in the corporate bond market, and we know that this is the chunkiest corporate bond market that we've ever seen. At 50% of investment grade is close to being downgraded.
So what's a pin, Ronnie? Ronnie, what's a pin that pops this bubble? Recession?
Actually, forecasting a black swan is kind of impossible per definition.
Well, give us a couple white ones.
Well, first of all, I think some would, of course, be geopolitical.
Interesting.
We all know what's going on
shock
with the, U.S.-China dispute. I think this is one of the most agreed things nowadays in the U.S., that China is evil, and that they have to do everything against the Chinese. And I think that the Chinese really they play the long game. They are not interested in a short-term deal.
Yeah, Xi doesn't have to be reelected next year.
Exactly. So geopolitical risks, of course. Then I think it's just economic numbers in 85% of all countries. At the moment, we're seeing weakening numbers compared to 1 year ago. So it is really a global cool down. It is not only in the US, in the Eurozone, it's all over the globe, actually. We're seeing an earnings recession already in the US. So 3 quarters in a row, we're seeing falling profits, despite the fact stocks are still reaching new all-time highs. But, if you dig a bit deeper, Dow Jones Transports and the small caps are far from confirming new highs. So I think, there's already many signs that the market structure is weakening. The market breadth is getting weak.
Does your fund plan to take advantage of, I could tell just from talking to you for a while that you expect a mean reversion in the stock market as well. Are you speculating on that event?
Yeah, of course. Yeah, we can go short, but actually, To be honest, we've been short already a couple of times, and we clearly underestimated the strength of this bull market, and this.
Others.
Yeah, this collective corruption, as a friend of mine once called it, that there's so many people and institutions actually interested that this will that we're just gonna kick the can further down the road. But from my point of view, you know, we're seeing recession risks being very high. We're seeing volatility still being extremely low. We're seeing that equity markets valuations are really high. And what's the best hedge for such a scenario? If there is a trend reversal, it is gold. Gold is a pretty good recession hedge. We've got a couple of slides here.
Okay. Oh, we are here. Yeah.
And that's just a very interesting long-term chart that I wanted to show you. That's the GSCI, so the commodity index versus the Dow Jones. You know, commodities can stay undervalued for a while, but this level of undervaluation is just
we're back to 1960s when I was really having a great time. Anyway, Ronnie, it's been what a great discussion, and getting Steve involved in it too. Really, that's the feature of this interview, is you guys discussing Bitcoin and gold. This be a good time to show your website, if you'd like, Ronnie, and you know, where people could follow you. Do you guys have a newsletter? And
absolutely. Well, newsletter. We publish once a year the In Gold We Trust report, which is probably the most widely followed publication on gold.
You want to show your website on the screen?
Yeah. Where do we have it? Yeah, there it is.
Okay.
In Gold We Trust .report. You can download the most recent study, but I have to warn you, we made a new all-time high, so we wrote 330 pages about gold, but it is a holistic analysis of gold. It's about the status quo of gold. It's about de-dollarization. We're writing about Exter's pyramid. We are writing about the portfolio characteristics of gold, where to best store your gold. We're writing about the Plaza Accord. We're writing about
the best place to store your gold.
Well, I like Liechtenstein. I like Switzerland and Singapore.
Okay, so you really don't have physical possession of it.
Yeah, no. I mean, I think the Doxbone strategy makes sense. So diversifying, and that's actually something that the really ultra high net worth individuals at the moment are doing over here in Europe. They're diversifying their gold holdings, so they don't have it only in Switzerland. They've got it nowadays in Singapore, in Hong Kong, in Sydney, whatever. And that's a really big trend over here.
Okay. All right, so I appreciate that too, because a lot of people have the belief and proponent that you should have physical access to it. Of course, you have security of that investment.
Yeah,
you do that. So here it's safe. Have you ever made a trip to go say hello and visit and kiss your gold bars?
Of course, yeah.
In Switzerland, you go there and play with it like King Midas.
Yeah, I don't kiss it usually. My wife wouldn't appreciate such.
Sport, Ronnie.
No, but that's important, yeah.
Okay, all right, Ronnie. I had a great time. I hope you.
Me too. Thank you very much.
It was really a great time for people to really look seriously into some shifts that are happening here, and who cares if gold pulls back to 1250 in a macro environment? It could happen. We all know everything can happen in the market, but the arguments are solid. If you really want to learn about gold, you just heard, you know, one of the most expert presentations in it, and we didn't even scratch the surface. So thank you so much, Ronnie, for edifying our F.A.C.E community.
Thank you very much.
Yeah, the video will be out
in
a few hours. And Steve, thank you for joining in. That was a great debate.
My pleasure.
And Ronnie, like it or not, and I don't know if you trade, but either way, you're now my trading warrior brother.
Thank you very much.
All right. Anyway,
Have a good one.
All right, everyone. That's Ronnie Stoeferle, and you have to follow him on Twitter and get his gold report and educate yourself for this new era that we're moving into. And that's a wrap for us, everyone. Have a great rest of the day. Remember, don't just count your Krugerrands, count your blessings, and we'll see you all tomorrow.
Thank you very much.
Thank you, Ronnie.
Bye-bye. Bye.
Bye.